Hello, everyone, boys and girls. Welcome to the trading compound. First off, Happy New Year. And as they say, New Year, new me. Just kidding. Anyway, with the new year, I've been thinking of ways, you know, for self improvement, both trading and personally. But anyway, for trading, I've been thinking, what the hell? January 1st, let's let's see if I can do a video a week or once a month or twice a month. I don't know. Definitely not daily, but hopefully at least once a week, or if not once a week, twice a month, I could squeeze out a video and send that out to you all. And probably I'm still toying around with the idea of it. So nothing in stone. I'm thinking probably before Tuesday nights, or maybe after Tuesday nights meetings. Maybe on like a Thursday or Friday. I don't know. Maybe Thursday. We'll see. But yeah, just trying to get videos. Probably more than likely, probably gold, because that's all I've been really trading all last year. I think it was like over 90% of my trades was just in gold alone. So I think more than likely it's going to be about gold. And last year was a great year for gold trading opportunities, but not so much a great year for gold. I don't know where, but yeah, I'm thinking just informal videos. So please leave comments, suggestions. I'll probably upload this to YouTube because that's probably the easiest way instead of attaching it to anything. But suggestions, any feedback would be greatly appreciated. Let me know what you think and enjoy. All right, everyone, let's get into it. So this is GDX. GDX is the ticker, and it's a gold miners ETF. This is one of the ones that I trade pretty much every day. So let's get into this. This is a very important slide. This is the fun slide. This is the disclaimer. So this goes over that I'm not a financial advisor, registered investment broker, dealer, anything like that. Everything in here is for educational purposes only. I'm not making any recommendations, no solicitations, nothing like that. It's strictly for educational purposes. Talks about risk, all that fun stuff. Make sure you pause the video on the slide. Read it very carefully. There's going to be a quiz at the end. Next slide. So here is GDX. Here's a 1-year daily chart of GDX. I'm going to go through it really quickly with the indicators I use. So first, let's go over the Bollinger Band. These are the gray bands that you can see here. There's the upper line, the midline, and the lower line. They're extremely popular on every platform that I've seen. Has these studies already programmed into it. So you just go into add a study and Bollinger Band, and usually the basic setting is always the one that works best. You can tweak it a little. You generally want the majority of the price action, so greater than 80% typically, to be contained within the inside of the upper line and the lower line. That's where you want to see the price. That's how you know you have it set right. You can get it to where it's a lot thinner, to where the price, you get more extremities, but you really want it to be contained at least 80% of the price action, if not more, typically more, depending on how the market's moving inside those two bands. It shows extremities in the market. So notice every time we peak above the upper band, the market really does not stay or close outside of the upper side. If it does, not for very long. So you can see here's an example. Here popped up a little but never really closed. There's a good example. Here it closed outside. And then also vice versa for the bottom end. We really don't hang outside of the lower end that much. So what does this tell us? This tells us that if you're looking to go long, you want to be a buyer when we're at the lower end. If you're looking to go short, you want to sell right here. So so you also want to use these opportunities where we go above to maybe lighten the load to take some profits, or to sell out or go short. So that's the Bollinger Band. The midline is where the price should be or find stability. So this acts more of like a support and resistance oftentimes you'll see it to where the market will come up to the upper end and then pull back to the midline. Upper end, here pulled back to the lower line, upper end, midline, upper end, midline, and so on. You get the idea. Next, we can talk about exponential moving averages. That's that red and that green line in there. They're called EMAs, exponential moving averages. You also have what's called an SMA, simple moving average. Very similar. The only difference is how they're calculated. Exponential puts more weight on it's an average line. So you have, in your 13 period, that green line, you have 13 days worth of data, 13 periods worth of data that's averaged together. And exponential means it puts more emphasis on the newer data versus what happened on the 12th day or the 13th day back. So, and then it plots the line. So, on these indicators, the 13th period, which is the green one, it's very bullish, or it's a bullish indication if it's above the red line. Because what that says is that in the last 13 periods, the average is greater than what it was in the last 26 periods. So it's a bullish sign. So when it goes above, that's bullish. So here we get that crossover. Here we get that crossover. We keep that crossover, and then we cross over to the downside, meaning that in the last 26 periods, we get that the bearish crossover, and pretty much that's where we are now. We're kind of in a bearish turn. If you're looking at just the moving averages. These moving averages also can be used as a balance line. So what I mean by that is if you take these two moving averages and you look, this is where the distance in between those two average lines is where the market should be if there wasn't any noise. So you'll typically see the market pull back to these lines and use them as support and resistance, or a good place to pull back. So here we got to pull back to these lines. Here we got to pull back to those lines. Here we're in a bear, so we get to pull up to these lines, pull up to this line, pull up to this line, and then now we're kind of we'll get to that. So then we'll talk about the MACD histogram arrows. That's this red arrow and this green arrow. I don't want to spend too much time on this because we could spend literally hours talking about MACD and how it's comprised. MACD stands for moving average converging diverging, but it's a very important indicator one you should get to know. All that says is you kind of want to start taking profits or lightening the load when you get these sell indications, and then obviously look to buy when you get there. But not every buy arrow means buy. They could you get some false signals in there. So let's get into kind of just looking at the chart and trying to figure out what the trend is. Everyone says trend is your friend. That's because it is your friend. You always want to be positioned with the market, not against the market. So at the end of the day, the market does what it wants to do. So let's just take a look at it and see what's going on. So here we make a new high coming up to the upper Bollinger Bands. We pull back. We make a new low. Then we make a new high above the previous one, so that's an uptrend. An uptrend is higher highs and higher lows. So we make a new higher low there, and then we make a new high here, and we just keep stair-stepping all the way up until here. Here we break below the previous low, so that tells you, wait a second, something's changing. Remember, the market can only do three things. It can go up, it could go down, or sideways. I've never seen it do anything other than that. So three things: up, down, sideways. Here, clearly uptrend. Here, something's happening. We could go sideways or down. Evidently, we went down. Now we're trending in the downwards side, so we make a new low there. And then, definition of a downtrend, the simplest one is lower lows and lower highs. So we make a new lower high there, then we make a new low, lower high, a new low, lower high, and then we make a new low here. But look what happens. We come up to right about, we made what looks like an island reversal gap. Look up that island reversal gap. We have a gap down, and then we have a gap back up, and there's your little island. So this is bullish. It's a bullish island reversal. So that's what we look like there, if we're looking at it from that standpoint. Now let's go ahead and look at it from just the price action, but we're going to look at it with these lines here. So these trend lines I'm going to draw on. I just connected these lows here, and then I connected these highs here, and we're making kind of a wedge shape. This is a 30-degree angle here, and this is a 17-degree angle here. So they're not both 30s or they're not both 17s. This one is the 30 and this one's the 17, so we make a wedge shape. Whenever you hear the word wedge, always think diagonal, leading diagonal. One principle I use to trade all the time is the Elliott wave principle. Elliott talks about wedges and he names them leading diagonal. So here, if you have an Elliott wave book, it's going to be on page 40, Elliott wave principle by Prechter, and it's page 40, figure 1-20, I believe. Yep, that's a one, figure 1-20. There it is in the slide. Pretty much identical here. I'm going to put in the labels, so there you see them. 1, 2, 3, 4, 5. It's an impulse, and then we get a pullback. Normally when we get pullbacks on these charts, we see a pullback in between the 61.8 and the 78.6 range. So we did hit that pullback. And then here, to get this calculation, you're just taking the difference between 12.4 and 31.79, I think it is. 79, yep. And then you get that difference. Then we're going to do the same thing to the lower end. We're going to put in a channel line. We're connecting these lows here, and then we're connecting this high and there. So up until this point here, I was long GDX. Now I've picked up some shorts on GDX, so I'm betting we'll probably come back down because we do have that gap there, and we have that gap there. And what do we know about gaps? Gaps always fill. Always, meaning 90% of the time. So I am currently bearish on GDX. I want to see this gap fill, and at least this one, but typically I want to see this one and maybe come back and test lows. We'll see what happens. All right, guys, there are the disclosures again. I hope you enjoyed this short video. I hope it wasn't too long, and happy trading.